Okay, let's say that you missed that first entry on gold and you want to get into the gold market, but you don't want to get in at the high. So where do you get in? You can see these little shapes that I've drawn around my chart here. You've got some interesting things that I want to see come together for me to go long again in gold and get a second bite of the cherry, if you like. Well, this indicator down the bottom of my chart is volume. And you can see what I've done is I take my lines and I mark pretty much in the last 5 days where we've had high volume. So we can just take these lines and just pull them around a bit and thicken them up. We'll just make this one black and nice and visible so everyone can see it well, because I know sometimes these YouTube videos are a little bit difficult to see. So that clearly was a high volume in the last couple of days, and the other area of high volume was round about here. That certainly was high volume. You can see that I put a nice little box which I'm going to color. Let's make this green, otherwise you won't understand which box I'm referring to when I say the box. So this is the green box. So one of the first things I'm looking for is I'm looking for volume to come in. Why do I want to see volume? Well, volume is money, because when the market makers, when the smart money gets into these markets, they tend to buy lots of positions, and they won't place all of their position at once. They slowly work a position in, because if they put all of their position in at the same time, what you would see is you'd see the market just run away from them, and that's what they don't want to do. So what they will do is they will buy into a market, and then they will do some selling as well. They're selling to the market because what they want to do is they don't want traders to be on the same side as them, because they want to make you think that the market's going down. They want you to sell into them because they want to buy your contracts, and if you're not selling, they've got nothing to buy. So it's important that they create the belief that this market is not going to go up, and this is why they work their positions. So what do we have in volume? Well, you can see here we had a couple of detail signals that volume was important. Right here I had my price level, and you can see coming in here there was big volume coming in the market, and that big volume came in on a down candle, and that's where the dealers like to buy. They don't want to buy when everyone else is buying, because if they do, they push the market up against themselves, and that won't be very good for them because they just push the market against them. So what they like to do is they like to buy on down bars and they like to sell on up bars. So you can see that this was a down bar with big volume, and indeed that's where the dealers were obviously building their position in gold. I would say that was one position point here, so that's kind of interesting. We can mark that because that was a point of high volume, and I would imagine that's where they were starting to accumulate. So we put this here, and this point here was again a point of high volume, and that's our low. If we go past that, then I think that we're not going to be looking at a rising gold market, but we've just got one line there, so that's good. So the next thing that I'm looking for is very often the time taken for a retracement will tend to be about 50% to 100% of the impulse up. So if we look at this and we say, okay, that was the move up, and we just copy that, I'm interested in buying this market when it retraces in time 50 to sort of 75% or 100%. So the blue box marks the 50 to 75, the black line marks 100. So these are all places in time where I would be looking for this market to go up. So I've identified a potential price level, I've identified a time area, and I've identified a set of conditions that I want to see this market exhibit before I want to go and take a second position in the gold market. I've already got a position down here which is in profit. It was in a better profit, but I'm wanting to accumulate a position in gold. So now I'm waiting for those two factors to come together: the volume, the time, and the price level, and I'm waiting for one further thing, one piece of icing on the cake, and that's going to be the candle formation. Now, I'm not a believer in candlesticks per se, but candles will show you, in fact any chart of price will show you what's actually happening in the market, and they can be quite telling. What I'm just going to do is I'm just going to put this on candles for you, and you can see that we've had a series of red candles all the way down. Now I'm looking for a particular red candle out of the many candles that we've had down. I'm looking for a red candle which looks to all the world like it's going down, but it's got one significant difference, and that difference is that the candle wick is going to be a long candle, and it's going to form hopefully what you would call a spike. So what happens, the price dynamics of a candle is like this: the market sells off, it sells all the way down to the low, which is marked by this bottom edge of this candle here, and then the buyers step in and they push it back up again. And even though the candle might close red, indicating that the open was higher than the closing price, what will happen is you will see the buyers step in and it won't close near the low. So I'm looking for, and there, this candle here, you can see that that's a nice example of a spike candle, but it's too early. There's no volume and it's not in the right place in time. So I'm looking for either a red candle, doesn't matter, or a green candle. It doesn't matter, they're all the same. A red candle is just as good. Well, a green candle would be better, of course, but it just means that the closing price actually closed above the open. It's not so critical. What's more critical is this spike. The longer this spike, the better I like it. And if this candle then closes and has a very short body, this little bit up here, then that for me will be a great signal to go long in this market, because it means that the buyers will be stepping in. The retail crowd that are selling the gold won't be able to keep the price down, and the market makers will just step in and they will just hammer this market upwards. Hopefully that's what happens. We have our price areas in time, this blue box, this black line, and this is our volume level that we want to see volume pick up and kick into this area. So 4 things have to happen: candle, price, volume and time. When they all come together, then we have the basis of a very good trade. Okay, so here we are back with our gold trade, and as anticipated, the gold market has actually come down to the black line that I drew earlier, which was the high volume level. Just, you can see down here, it was the volume kicked in at this point, the market touched it, sped away, it did go lower, but at someone somewhere decided that they would buy a significant amount of gold, and at that level it was clearly defined by the volume. So volume supported support and resistance is something which is critical, and really you've got to look at it as a trader. I used to look at a lot of Fibonacci, but I found it totally useless to trade, because Fibonacci doesn't actually tell you anything. You've got so many levels, it can hit any one of them and it doesn't mean anything. So you want to see commitment by other traders that you potentially have a good setup. Now, just from I can see that that's about a 68% retrace. I'm not even going to bother putting a Fibonacci tool on it, because I've thrown those in the bin. What you have to watch is you've got to watch price action. The market will stop where it stops, and the price action will show you that that's the level to get in at. Okay, so what else have we got? Well, we've got some great things. We've got our price level, and as you can see, the gold market seems to have problems getting through there. We've had volume kick up, and volume's kicked up into the high box that I defined earlier. So we have 2 potential keys to our trade. Now, what's the third key? Well, we're looking for some form of reversal candle, and as I said earlier, I would potentially love to see a spike candle. Spikes are great because they mean that there are definitely no buyers down there, because price could not be held down there. Now, we haven't got a spike at the moment. So what does that mean? Well, at the moment it doesn't mean anything, because the candle hasn't closed. Any form of reversal candle is a good reversal candle. So that could be a doji, that could be a spike, that could be whatever they call it, an abandoned, a pregnant baby or something. I forget. There's so many candle patterns, and they all mean absolutely nothing except when you're in the right place for a reversal. So that's what we've got now. We've got volume, we've got a price level. What we haven't got is we haven't got time. So I'm going to sit this one out because this candle has yet to close, and if we get a reversal candle, then let's have a look at what my capital exposure would be. Well, this is a gold market, and depending on your broker, some brokers trade to 3 decimal places, some trade to 4 decimal places. So I'd like to put my stop down here, out of harm's way, and the potential on that would be about a 332 pip stop. Well, that's not actually very much in gold. Gold can do that in a blink of an eye. In fact, that's like having a 30 pip stop on a currency, which isn't very much. So in theory, I could get into this trade now if I wanted to and risk in effect 30 points. But I'm not going to do that. I'm going to stick to my guns. I'm going to be disciplined, and that's what you need as a trader. You need iron will and discipline, because this candle could form any sort of candle. It could go right through my level, in which case I wouldn't want to be in the trade, and I don't want to lose money finding out that I'm wrong, because all I have to do is sit on my hands and do nothing. And that's the great thing about trading. You wait for the setups, and just like a sniper, you're waiting for your target, and when everything comes together, you pull the trigger, and that's it, you're in. Thinking is finished. The thinking's done before the trade. So we'll see how this one pans out, and I'll be back in about 20 minutes. Okay, so this is gold trade, and how are things panning out? Well, let's have a closer look. This is the hour chart, the 4-hour chart that I've gone to here. We'll just go down to the hour chart, and we'll just enlarge this a little bit so you can actually see what's happened. Well, the nice thing is that the gold market did actually pull down to the level that I had actually thought it might, and we got volume kicking in. Yes, nice volume coming in there, and we got even more on the up bar. So the potential is the market makers are with us on this trade. They're buying into the market as well. We've got a nice little spike candle forming, so the potential is that there's more room to the upside. So we didn't get a spike on the low. We got a reversal, I think they call that harami candle. I'm not sure, many people know candlesticks better than I do, but for sure that looks like a bullish candle. If this closes like this, a nice little spike candle, the potential is that we will move up, take out this high, and then we are on a march. And the potential is for this trade to run for at least 1 or 2 months, and I will keep getting into this trade on every single retrace when I can identify it. Now it's going to be the same strategy that I'm going to use just as I showed you here. There's nothing really fancy about trading. The trick is to buy low and sell high, and it really is that simple. But the key is actually, how do you identify those points? Well, that's something that I do in my trading room on a daily basis, and I look for setups like this. It's very exciting that I can actually show you a real setup in real time. You can see that this isn't Photoshop. That candle's actually moving up and down, and I don't know what's to the right of my screen. This trade might have failed, and I still would have posted it, because the analysis is sound. Once you do the work in trading, once you've got the experience, then you can actually make money out of these markets, and it is deceptively simple. In all these ups and downs and squiggles and crazy moves that you see, there is one thing that will save you every time, and that is trend. And if you get into a trend, you make an awful lot of money in a very short time. And that's what I try to identify. It's the start of a new trend, because at the beginning of a trend, you have the chance that you can actually find a entry that will actually give you the potential to make quite a lot of points in a week or a month. And also, it's very relaxed trading. Here you see the hour chart, but actually, to see the true potential of this trade, you should actually look at the daily chart, because in effect it's the daily chart where we're getting into this, and that's what we're trying to run. We're trying to run a daily trade. So potentially we're looking for a trade maybe to run up somewhere to around here. So that's maybe 2,000 points away. maybe longer. I don't know. It's we will know when we get there, because this market will again give us another good signal that we're going to see a reversal, and I'll run another cycle analysis, and that means that we should be able to get out within maybe 20, 30, 50 pips of the reversal point in this market. So it's been nice showing you this trade. Pop by forexplanet.co.uk and you can actually see me do this live with you in our trading room. So pop by, it's well worth it.